Throwback Thursday CTM session. Looking forward to this one and spend time together. Yesterday, I was asking you guys anything you want to talk about, comment in the section below, and we'll go ahead and cover them today. We are going to do that, and we got a lot of good questions to go over. It's going to be a good one. I'm looking forward to it. This is Jordan with Conquer Trading and Investing. If you're new here, welcome. If you're not, welcome back. People are looking at gold melting up and they're loving it. People are watching the performance of gold to Bitcoin from the calendar year, January 1st. By the way, just zoom out a couple of hours and at the open today, right before the New York Open for equity markets, it was like, wow, look, the tech is melting up. Bitcoin's moving now, and gold and silver before getting hammered. Everyone is like, what are we watching in real time? The implosion of the system. And what could stop this? The government shut down? That didn't mean anything. Momentum begets momentum, though, and it is fragile. And we for sure are, let's say, we're just like, look at this move is unbelievable. Tracking the red one over here, and you could just see there hasn't even been any type of shakeout. It's been up only. I suppose those that are getting wrecked are those that are bearish. You look around your timeline, everyone's bearish. Jordan, you got bears in the background. Look, and I made sure to tell you this is fourth day in a row of having bears in the background. It's equity specific. It has nothing to do with Bitcoin, and I just want you all to know how we're positioned. By the way, Bitcoin bull runs is back into the market. Bitcoin trading at $120,000. Absolutely loving it. On our swing trading templates, we have Ethereum now joining Bitcoin, both in the market on long. Amazing. We went from 100% cash now across Bitcoin and crypto, 50% allocated and 90% allocated with our stocks. And MicroStrategy is on deck here, potentially getting ready at the end of today's session to confirm a long tomorrow. I know the bears on the background, 4 days in a row of me watching out for some type of snapback here on X, but I never would have entered any of these trades. There's no way, because I was like, I don't even want to say optimistically cautious. I was very cautious ahead of the seasonalities we were coming into. And I said over here in mid-August, I think that we're going to be trading lower as we enter into the end of September. We're trading significantly higher. Significantly higher. It's absolutely unreal. People wondering what could change it. There's got to be some type of like news that could go ahead and derail this current run. Other people are thinking, you know what? In hindsight, it's going to be clear what we were seeing was the implosion of the value of the US dollar. That's why, and when we talk about tech, it's like the Magnificent Seven, right? Select tech continued to dominate, continued to earn like crazy, continue to carry everything. Russell 2000, no, not, and gold, people are watching that slow motion repricing in real time, only it's not feeling like slow motion all of a sudden. And then people are watching silver once again challenge $50 silver, and they're like, oh, I wish I was involved in that. They're like cats, like, and then we have Bitcoin here at 120,000, and people have given up on Bitcoin. And I'm going to get back into our equities in a second. Let's start the story over here. Since January 1st, right? I mean, for me, it's just a calendar year. It's a very arbitrary point. And gold is 46%. It is absolutely running like a beast. It is running wild. Tech is obviously the laggard, but I mean, tech is outperforming. And then Bitcoin up 28%. And a lot of people are like, wondering what's going on. Look, I think there's some other points that are probably more pivotal, more important to look at. One of those is the election that was not too long earlier. It was about 6 days earlier. And since the election, by the way, from that arbitrary point of January 1st, Bitcoin had just made a 50% move to the upside. So it's a little, it's a little weird to be, measuring something after a 50% move to the upside. But either which way, since the election, Bitcoin obviously outperforming by a 2x. And you see gold 40%, Bitcoin 72%. The April low is a really good vantage point as well to look off of. And since the April low, it's Bitcoin that's been outperforming up 57%. Gold is lagging off of the low, which is interesting, I would think. And then you see tech also performing extremely well off of the low. So don't get caught up in like, watching shiny things. And listen, I don't, that in March 2023, we called the breakout of gold into a super cycle. And I think people were like, the gold has been at 2000. How many more times? It's going to get smacked down. And I was like, well, you know what? I, it's not going to stop at 2,500, and we'll revisit again at 5,000. And it just blew past 2,500, and it's blew past 3,000, and it's blown past 3,500. And now people are like, wow, we're witnessing a repricing of gold in real time. And that's entirely correct, but it doesn't mean that it's going to, and it, you have to wonder, I wonder sometimes, whoa, are these things just going to, are we is this going to be like Venezuela? Are the stock markets going to be pricing in the devaluation of the underlying? We're seeing it happen. We look at the dollar gauged versus other fiat, and versus other fiat, we're like, oh, the dollar's off 10-12% in a year, but that other fiat is also devaluing against gold, against Bitcoin, and even against tech, right? So it's very important to kind of like frame it as what's happening. So you wonder, or I wonder, you know, wait a second, are we going to see an actual situation where people like gold is overbought? And yes, it's tremendously overbought, but it's been overbought since February. It's the longest in its history. Do I think that it's going to therefore remain overbought without correction or volatility? Absolutely not. Do I think that Bitcoin here is going to play catch up? Oh yeah, it's got. We were talking about it all week. We were saying all our eyes are off Bitcoin. Bitcoin here is putting people to sleep. Bitcoin is about to do Bitcoin things. Hopefully this is it. But it's a precarious situation. If we look at what's going on here, and I said, look, I'm bearish. I never would have been in these positions. And we're seeing now like these begin to build as T triple Q is up 12% now, 12.8. Tesla up 20%. FNGU hanging in 4%. Now we have the spot ETFs. IBIT up 5.8%. Nvidia just taking a trade up 3.8. That looks like a scary chart to me. And I look at Nvidia, and if you go like this gap up over here, if we gap down tomorrow, that's known as a island reversal. Why am I looking for a reversal when things are just going straight and smack up? Maybe I shouldn't be, but I am. I'm bearish back here. But look, over here you had a massive gap up. I could have been like, wow, this is so far overextended. If we would gap down tomorrow, this could be an island reversal. And that's not an all-time high. Sorry. I was looking at this one over here. And this looks very similar. Huge gap up, and it just kept going up. And that's why we trade momentum, because honestly, you don't know what's going to happen. No one knows what's going to happen. We went ridiculously quick from 100% in cash, all of a sudden fully allocated. I hope that as these trades close out, my worry, my concern was that this might be a little difficult to trade through the next 60 days. We're going to probably get chopped up. And any trade that I enter long, I'm just expecting to get stopped out. Now it looks like we get the opportunity to walk away, hopefully, with some profit. And you never know. These bears over here may make me look ridiculous because they might be here for the next 2, 3, 4 weeks. We might move through October, and it turns out that these positions are still carrying. That's the difference between having an extremely solid plan to trade and just going at the whim of the market. Look, I want to play this with you. And it's a little long. It's like 45 seconds and the punchline is at the end. So you have to just like pay attention for 45 seconds here and listen to this. Let me go ahead and refresh to get it
Having a
going.
losing trade is a little bit like betting on heads and tails in a coin flip game. At best, there will be a 50% chance that my trade will be profitable, which is why I insist in my speeches on people never guessing where the high is when they're long, and never guess where the low is when they're short. When I have a losing trade, and believe me, there are plenty of losing trades in my portfolio, I simply move on because I have the belief that the next trade, just like a coin flip, could be the winning trade. But when I have a winning trade, what makes me very different to the vast majority of traders is that I press my winners.
Okay, listen, we this is CTM, right? 50%. We have a little worse than a 50% win ratio. Say 4 out of 6 coin tosses, we expect losses. The difference he's saying is that we listen to this. I press my winners. We press our winners. He's going to say that he adds to his winning positions. We don't do that because the way that we position is that we're already taking a very high allocation of our portfolio because of the edge of the system. We don't add to our positions. Not that it might turn out that one day that actually trades that are a certain amount into profit tend to carry, and therefore we do, but we don't do that. All right, now just listen over here.
That means that a lot of my trades will actually move into profit, and I will buy more, I will add to my position, and then it will move back again, and I'm forced to take a small loss or a break even.
Small loss or break even though we don't move. Hold on 1 second. Even though we're not adding to our positions, we take a lot of small losses and break evens and or small wins. Small win for me is like a break even, right? And these positions here are a classic example. These might altogether collectively, and Tesla might help us here lock in some nice gains over here. As you can see, the deviation beginning to move back down, and hopefully we get the opportunity to lock in some nice gains, or Tesla may continue. We're going to take a look at Tesla because one of the questions asked was specifically regarding Tesla. So we're going to be looking at Tesla from a different view, not from our trading. Same thing with T Triple Q, and we might walk away giving up a substantial amount of this profit and closing these trades at a small gains overall. And to be honest, I thought we were going to get chopped up and like walk away with some drawdown. So that would be nice. Or these could be the ones because we're pressing them until momentum takes us out of the market. These could be ones that are on average T Triple Q 28%, FNGU 45%, just average trades. We don't know. We'll figure it out. We'll find out. Let's go. I know it's October. A lot of people are extraordinarily bullish. I'm saying this is for equities, right? I think what we're seeing, and it looks pretty clear as we saw our equities kick off starting 2 weeks ago first. And they position long and they've been holding long. And Bitcoin and crypto were on the sidelines. And now we're seeing the move into Bitcoin and crypto. It looks like, and gold too. Gold's been obviously, we don't have any templates for trading gold. Gold's been just mooning. And it looks like maybe people are like, you know what, right now, it might make sense to take some off the table and let me put it into Bitcoin, right? Bitcoin and crypto. And it looks like we're seeing only just like a small rotation, right? Coming out of some profits here and moving into Bitcoin. So whether or not October remains October, which, man, I just can't. We have been deviating so far for so long. Is it going to be the pullback that never comes? And does it continue? I'm highly cautious through the end of the month, and I remain so. And is it possible, right now, the government shutdown is a non-issue, that it becomes one, that it turns out that, listen, this thing is not coming to an end anytime soon, that it goes 45 days or something like that, that a massive amount of government workers wind up getting let go, Why would that matter? That's good, right? Well, yes and no. I mean, look, these government employees, they get paid a lot of money and they spend a lot of money, and that happens to be good for the economy. And if all of a sudden a lot of those people get laid off, well, the government, why it's going to be saving a ton of money, it's just going to spend it in a second anyway. But now that money that'll probably go towards like, you know, you know, all the waste and fraud that occurs within government spending. I'll just leave it there. But it's healthy. It's is it just that government workers get paid, roughly 25-35% more than the average private sector employee? No. Uh, is it going to hurt the economy in the near term if all of a sudden there's a significant amount of layoff? Yep, for sure. Is that going to affect the earnings of and spending of, Alphabet, Meta, and Microsoft? Likely not. A lot of people are looking at the disconnect between the job market and what the markets are doing. Now, that one day there could be a reckoning. Trying to time that reckoning, that's a different thing. All right, we got a lot of questions to get into today, and we're gonna get into them, but we'll start over here at MND. So let me move over to Bitcoin. Someone doesn't like that. See ya. That's all good. You know what? Regardless, it doesn't even matter. We have a bold title here. Conquering the markets. Guys, it's so ridiculously difficult to do. So few could do it. What we have done here is absolutely, absolutely spectacular. Could Bitcoin hit $150,000? Look at over here. I'm just following along these two touches of this top trend line. That top trend line, into the end of the year would be $150,000 is in play. Yeah, that would be towards the top end of the channel that we're currently running within since the summer of 2023. I don't or 2000 and I'm sorry, since the spring of 2024. We've had two touches to it. It's upside resistance. Could it be tested? Or is there a greater or higher probability that before that's tested, we actually break down over here? $107,000 would be a little bit of a structural breakdown. You can see that structure started from over here. It was then resistance over here. I don't know, flip a coin. It's not so much about what you expect to happen. It's managing your risk around that momentum. Right now, we got some nice momentum. Let me just go ahead and take a look at what this looks like over here from our breakout, and we just have that nice breakout. And yeah, expectations are that could carry into a new all-time high. And if you were to look at things like the seasonalities in Bitcoin, I think when you look at October, November, December, are so askew from 8-10 years ago when you had these incredibly massive. I think it would be more appropriate looking at the last 6 years and then finding out what the average return is for those months. I think that you might have a little bit better of an assumption to go off of what those seasonalities are offering. When the asset was, a couple of $100 billion or a few $100 million, and you're looking at what the returns were in those months, I think that it just sets expectations off. But for Bitcoin to reach $150,000 from where it is right now, that's just a stone throws away. So it could happen for sure. Um, Gandelite. So yeah, 150 is in play. I don't think that it would be that if there were so many, and there were people distributing at $100,000. Uh, you know, do I think that as you move towards 135, 100, like I think that continues, and I think there's a lot of overhead supply, and I think that a lot of people, first of all, are extremely bearish on the macro. A lot of people expect that, you know what, we could see a lot of 4-year we could see 4-year cycle behavior play out, and 2026 could be a bear market. And rather than wanting to give up 70% of their unrealized gains and go through that and then wait another 4 years, there's a lot of people from 8, 9, 10 years ago that are holding on a lot of corn, and they're very comfortable distributing here and diversifying out. And it makes a lot of sense. Whether I agree with the outlook or not doesn't really matter. For them and their position, it makes a lot of sense. And I don't think, like, I think we're seeing a lot of that Bitcoin move from those willing hands to these long-term hodlers, these new corporate treasuries. They're buying billions and billions, and they don't have plans to sell. And I think that's extremely healthy. And eventually, there's less and less Bitcoin to be offered, and then price is going to continue to rise. And that's why we have more of that sustainable move up rather than a euphoric move up. It's very difficult to move price when you're talking a $1 trillion asset, when with outside of some type of major buyer coming into the market, and I consider MicroStrategy a major buyer in the market, and they're methodical about it. And what you're seeing eventually, as that, willing sellers, that's, you continue to move up. But are we going to see Bitcoin, 2x in the next, 3 months? Highly unlikely. I outside of an adoption event, I just do not see that whatsoever in the cards. And there's nothing wrong with that. And actually, there's everything good with that. It just gives everyone more time to accumulate and save in Bitcoin. It's just much more of a sustainable market than it was in the past. And it seems that, like, outside of something fundamentally changing for the negative, that's going to continue. And that's really positive. That's really, really good. We were looking here at some sustainable channels over here. And a question came up about, as far as, I really like this question. It was a good one. And boom, 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 boom. Love the long time takes on the market. Long term takes on the market. Thanks for sharing. Learning that nobody told us in school. I really feel like we do the youth a disservice in not really being able to teach them what it means to be able to save and invest, and we have to figure that out. Great session. Could you cover the outlook for Tesla with the year-over-year earnings and robo-taxi timelines? Listen, Tesla just had earnings over here. Sorry, they didn't have earnings. They had Q3 deliveries, which were exceptionally high, but they were high on the ending tax credits to EVs. So a lot of people who were on the fence, they really wanted to get a Tesla. They've been putting it off. They've been waiting. The tax credit on the electric vehicle that's coming to an end gave them a bit of push. So that makes sense that you've seen a jump in deliveries, smashing expectations, and that's likely not going to continue. It's going to decline and fall off. And robo taxis was meant. Look, let's take a look at Tesla. And Tesla, as I have it, it has a CAGR of about 20%. It's really fantastic. As I see it right now, it's much more towards the overbought than fairly priced. Fairly priced is going to be anything down in this zone, right? Anything below, anything into that line and below. That's an opportunity to take a position as far as dollar cost averaging for any time of long-term position. But when you're taking a position up over here, why, if you had to ask me, yeah, I think that, there's a significant chance within the next 4 or 5 years that Tesla is trading at $900 a share. If you're buying up here, chances are that you're going to have significant opportunities and lower prices. It seems that we've come a little far, and now's not the time to be leaning in. I mean, our current position is up 20%. When in doubt, follow the moat, and it'll keep you when the momentum comes in. Is Tesla's future really bright? I believe so. Do I think that Elon believed in the future of Tesla when he just took that new position that he did? Of course I do. Do I think that it was also made a lot of sense for him to put kind of a floor into the market, showing that a lot of his investments are levered around those Tesla shares. So I think that was also a very smart move in doing that. But the truth is that for Tesla's humanoids are likely going to, in the long run, fast forward 4 or 5 years, be a significant revenue generator. Elon made a lot of mistakes in so much as that his company has become politicized, and a lot of potential customers. There's no way that they will be buying that Tesla, that brand. Maybe it worked the other way around, but I don't. I mean, he kind of separated himself from. He tried to put himself back towards the center. So I don't know. Um, Looking at it from this perspective, it seems that you know if you're buying up here, I would expect significant drawdown. I would have patience. I would wait for the opportunity to be able to look and lean in and get Tesla when it's trading a lot closer to that area over here. Sorry, the futures gap, CME futures gap from 111 to 110,000 Bitcoin. When does that get filled? Well, first of all, you're really not going to like this answer. But let's go over here. So trying to find the gap. Come down to a weekly chart. We're gonna need some elevator music. So maybe someone can help me. I don't see a gap. The only gap that I see is not even going to be here. We got a gap all the way down here that has not been filled. And likely, unless Bitcoin goes to zero, will never get filled. All gaps don't need to be filled. If I don't see the gap that you're all looking at, if someone could help me, I don't really see any gaps that need to be filled or are open, I should say. Yeah. So listen, there's an extraordinarily high percentage of gaps that get filled. I couldn't give you the data between what time they get filled in. I'm looking down over here. Is this a gap? There's even a small gap over here that never got filled. Okay, you're looking at this gap up. Thanks for Lewis just giving me a better perspective over here. So here you go. Here's the gap in question, and you could see it and gapping up. It's about, let's say, $500 gap. Is that gap something that needs to be backfilled? Look over here. You got a gap, right over here, down at 91 into 92, and why am I saying this? That's why I was looking at the weekly, Lewis, because this is just a weekday gap. There's the gap up. Here's the close. There's the open. Guys, this has been a long time. It's a good thing we're doing some throwback to get myself back into the flow and groove over here. But I first of all, I don't pay any mind whatsoever to gaps. They don't play any type. They don't carry any weight whatsoever in the way I navigate markets. They simply a gap could be open for a significant amount of time before it gets closed. And what's awesome today, it's very easy to access that historical data. And you could probably even try. I mean, if it doesn't know, it'll make stuff up. But you could try Grok or ChatGPT or another LLM, and you have to fact check them because they make stuff up all the time. But you could find out relatively quickly the percentages or estimations, I should say, of the amount of time on average it takes for a gap to fill, the percentage that never get filled. Um, I would not. They just this gap could get filled if it gets filled, you know, um, tomorrow, or it could get filled 15 months from now. It's just I don't I don't really think that it's something that yeah, the only thing I could see it doing is adding fuel. Is people shorting, looking for that gap to get filled, and then having to buy back higher. But I just don't see any edge whatsoever as far as playing a gap strategy. And there is such a thing as runaway gaps. And runaway gaps, look, we can look at the old favorite here on Amazon. And if you take a chart of Amazon and you look at weekend gaps, you will find a significant that never got filled. I have no idea where any are. Here's one right here at $7 that's never got filled and likely never will. Here's another one right here. This one didn't get filled either, right? At $22 and so on and so forth. And there's a lot. And the last major gap was the last major gap of 75 was great. So I wouldn't really be paying mind to the time frame for when that gap gets filled, because honestly there's no edge in that. And hopefully it doesn't for a long time, if ever. If ever. Could you imagine when Bitcoin actually accelerates? And there will come a time when Bitcoin accelerates. Uh, I'm gonna look at this chart over here. I'm gonna hide the price because the price is irrelevant. We're not looking at that. But look at watch Amazon over here, right? We just looked at Amazon. There's many weekend gaps that never got filled. Look over here during this area. There will be times when this price gets away. You've heard of which I think is ridiculous, but it could happen if there was some. I don't believe in the Omega candle or anything like that. But what's more painful is the same thing that's happening on gold. And if you remember when gold was at $2,500, there were people looking for the pullback in order to buy more. And then when gold was at 3,000, there were people looking for the pullback to be able to buy 3,500. I was looking for a pullback to 3,000 or below. Never happened, and so on and so forth. And why gold is and could easily, you know, it it could easily get away from you, right? You're all familiar with the price of gold during the Weimar Republic, and eventually the thing just starts going up like that. And why I don't believe someone asked me not too long ago. It was like in 2021, uh, like late 2021, what I thought the odds were of hyperinflation taking place with the US dollar. And I was like, that's extremely low. I would say that would be somewhere around like single digits, like 8-9%. I just don't see that happening. But if you look since 2021 and today, and you look at the price of gold and dollars price in gold, you might say, well, actually, maybe it's happening. Maybe we're seeing an actual revaluation taking place, right? And I think it's happening. You think it's happening. And I'm saying gold. And if Bitcoin's trading at $150,000 in a couple, within X amount of time, we'll just be looking at Bitcoin and I shouldn't even say gold, but gold is is glaringly apparent to everyone, and we are seeing central banks continuing to accumulate gold instead of U.S. Treasuries. So it's significant, and I firmly believe that the appreciation of Bitcoin against gold is eventually we're going to break out. When I say we're going to break out, I'm talking about this over here. Oh, let me revert that. And gold, I mean, Bitcoin is going to have another significant appreciation versus gold. And any time that you get the trend line where gold breaks out versus Bitcoin, it's happened many times throughout Bitcoin's history. It's always been failed and will continue to do so. So we could talk like this, and you could look at like there's gold breaking out versus Bitcoin. There's gold breaking out versus Bitcoin. There's gold breaking out versus Bitcoin. It's still holding line, and it's still breaking out versus Bitcoin. But gold's been overbought here and on a massive bull run since February. And eventually that's going to stop. Bitcoin is going to play strong catch up. And when that happens, we're going to get the major breakdown. Yeah, there could be bear markets. There's been plenty of bear markets in Bitcoin. The next bear market in Bitcoin is going to see significantly reduced volatility, and it's going to be reflected on the gold chart as well. Digital gold, I don't know. It's so much better than gold. This was interesting. This is coming from a Morgan Stanley wealth management report, and they are advising to financial advisors that they should be telling their clients to take a conservative approach to cryptocurrency, right? Which is interesting. You go back 5 years ago, and you weren't seeing any type of investment banks advising their advisors for any type of cryptocurrency allocation. You were seeing Bitcoiners telling people and everyone, they're like, listen, like you got to get off zero, showing the difference a 1% allocation would make in a portfolio. And by the way, if anyone in TradFi had listened back then, that 1% allocation would now be a 10% of their portfolio, right? And again, 1% was just like trying to get people to like get off zero. Nobody thought that a 1% allocation was appropriate. Here you have for balanced growth, them talking about a 2% allocation, or for an opportunist opportunistic growth 4% allocation. But check this out. They also say, listen, you should have your this is such bad advice in my opinion. They're telling, I mean, is the allocation low, right? But more importantly, and we're seeing also, right? You remember when we were talking about the super cycle of gold breaking out? Like back then no one was telling like no, like 60-40, 60% stocks, 40% bonds. No, now today people are like, "Oh, you should have a 25% allocation to gold." As gold has been overbought for the past 9 months. Uh, you know, they're telling their advisors that their clients should be rebalancing their portfolios on a regular basis, whether or not that's quarterly or at least semi-annually. And the reason they're saying it is because if you don't, you're going to get like a swelling position, right? You're going to get, look, could you imagine that this advice was given 5 years ago to clients of Morgan Stanley, and they went with the balanced 2% growth? And if they were rebalancing either quarterly or semi, that would have not become 20% of their portfolio. And if they didn't rebalance, it's become 20% of yeah, they went through a period where they went through a significant drawdown, 76%, but they only started with a 2% allocation of their overall portfolio. I think it's a mistake for them to be talking about as Bitcoin here is just moving into the early majority phase, to talk about that clients should be looking to take, first of all, such a small allocation, but then rebalance that allocation. If you were rebalancing that allocation, instead of being able to have that 10 to 20% growth, it would have been radically subdued. That's what getting back to it over there is letting those winners run. We were just looking at that video and talking about CTM dynamics and how, which means though, if you're letting your winners run, yeah, you're going to give back at a particular point in time, lots and lots of profit. Nevertheless, here we are. What other questions do we have over here? So, opinion on Bitcoin treasury versus Ethereum treasury companies. For example, Bitmine that Tom Lee leads been aggressively accumulating Ethereum towards the 5% supply goal. Has anyone? The last I heard, he was trying to raise like $5 billion, and I haven't heard anything since. Just with staking, it feels like it would be a safer investment, right? I'm going to add, before I give any of my insight, some of the comments over here was, like safer investment, you're talking proof of work versus proof of stake. Proof of stake is equivalent to the current fiat monetary system, which is true. But if you look at the fiat system and the run that it's gone on ever since, the dollar's been depegged from gold, I mean, look, fiat is as weak as can be. We all know that, but it doesn't mean that, gauging it from a fiat basis, like what's the safer investment over a longer time horizon? No question, in my opinion, a Bitcoin treasury company, and specifically strategy over Bitmine. But listen, in the near term, it might not look like that at all. I agree that the opportunity on Bitmine is much more volatile. I'm also reminded of, it's not just Tom Lee, it's Peter Thiel, who has a 10% stake in the company. Peter Thiel has a strong history, whether it's Palantir, whether it's PayPal, whether it is Facebook, of really being on the right side. And I personally think that there's a good chance you see Ethereum chosen as the chain for things like digital treasuries and other stable coins going forward. I think ultimately the move to proof of stake is going to kill Ethereum, but I think it's going to be a significantly long time before it does. We talk about, like, for example, the hype phase. You can see the massive hype phase in Ethereum. And I don't know if it's because of Bitcoin and Ethereum riding the tails of Bitcoin's adoption, but its facing reality stage has been a massive consolidation, very tight compared to Bitcoin, which went through a facing reality and then much different tight until finally breaking out. And I would not be surprised in this fundamental shift when you're seeing now corporations, and assuming Bitmine is able to succeed, which means that they're able to raise money in the public markets in order to continue to buy more Ethereum. I think that there could be, especially now also with monetary policy now aligning much more favorable to Ethereum than Bitcoin. Whenever this bull market peaks from between now and then, I think outside of an adoption event for Bitcoin, there's a strong chance that from here you see Ethereum outperform. You don't often hear me talk that favorably about Ethereum, but here we are. And I'm going to just pull up the cross over here. Let's check out what's going on. Oof. That's very close to a nice breakout and you can see if Ethereum is running to new all-time highs versus the dollar, it could definitely catch the juice. Yeah. Um, Look, ultimately, I think that this breaks out to the upside. And, I guess when it does, there'll be lots of talk about is Ethereum going to flip Bitcoin again and what have you and whatnot. Longer term view, you all know, I just want for those that are not or new, I just want to let you know that I believe that the move to proof of stake was near term bullish for Ethereum and long term a fatal blow and will ultimately kill it. There's no arguing proof of stake versus proof of work. And but it was the analogy to fiat was brought up, and fiat has this habit of being able to stay around and continue the charade a lot longer than people expect, right? A lot of people in the 1980s thought the debt was too much for the US dollar. A lot of gold bugs expected gold to be significantly higher than it is even today. So these guys are the masters at charades and what masters of money, right? For a reason. The circle back, we looked at it last week. It wasn't doing so great. So it's interesting that Circle is able to. We did say, look, we said, listen, it's the 50% drawdown after the IPO. We expect significant stablecoin growth to occur over the next 2-4 years. And why it doesn't have the same monetary dynamics as Tether. It's a strong play with an extremely large market cap. There's another question over here regarding whether or not we could get updated view on the leveraged ETFs we were looking at, including TMF, NAIL, and YIN. And ultimately, what we wound up doing since that time is adding the Bitcoin spot ETF template and also the MicroStrategy template. And first of all, there's a difference between making it look easy and then actually what it is. And all of the amount of work, the amount of collective collaboration that has gone into producing these solutions is absolutely breathtaking. And there's nothing easy about it. I thought that, it's also amazing too for me. Like my mind gets blown when how organically what happened is over here that we focused in on four things. First of all, it was all tech, and we focused in on T-Triple-Q, which is like, you know, 3 times leveraged, like top tech. And the best part about it is the best performing are allocated in there, and the ones that are not are taken out with better ones coming in. And then with Fang over here, FNGU, Fang Plus, like the best performing of that tech. And this is our best performing template. And the same thing, best performing are allocated in, worst performing allocated out. And then the other two that we was Tesla and Nvidia. And it makes so much sense in hindsight, right? And if you were to pick, the next 5 years, Tesla and Nvidia, I mean, look, there's no sign of any of this spending on the AI race to stop. And Nvidia so far is the beneficiary. And it seems so well done. Adding to it the Bitcoin spot ETF and then MicroStrategy, it's a beautiful fit. And I think that even in our equities, that Bitcoin allocation for sure deserves a purpose. We tried things like gold miners, and in a bull market, it's easy enough. But the problem was that you know you never know, and ultimately we're looking for what is the most consistent. I think during this period of time we're in, tech, Bitcoin, and gold, we don't have a solution for gold that works out well. And hopefully many of you bought a long time ago. Um, but as far as adding in things like other ETFs, we got, let me just come over here and get this back to Ethereum. Let me come over here and jump back to where we were looking. And we have yin, and you could see since we began, like yin has these moves. It's a 3-day chart, but it'll express what I want to talk about very easily. Like if you're trading this on a CTM template and you get this mega gap and run, here's what it looks like. Let's look on the daily and let's just look about, over here. These gaps that occur, they make it not tradable for us. So even though I felt like, okay, potentially Chinese tech would play a good role in our overall diversification, it just doesn't work for us. Looking over at the 3 times home builders, and I mean, there's also a lot of gaps. You know what? I just rolling it back. Tech is what we believe is going to outperform the devaluation, and it seems a lot more appropriate to be focused on things like, T triple Q, Fang Plus, Nvidia, Tesla, and that's ultimately why, instead of spreading ourselves thin, which we're already like diversified. I don't know which of those 4 templates are going to outperform. And even though like recently IBIT and you know MicroStrategy is going to do its thing at a certain time, and the outperformance is going to be mega. The thing is that we're protected. We'll only be in there when the momentum is kicking out into the upside. Same thing with TMF. I just they don't. It was a thought in could we bring any type of diversification into our overall portfolio, and it's important because we will go through periods where like T triple Q, FNGU, they only trade the buy side. And if we enter into a prolonged bear market, a recession, a deflationary debts, anything like that, we like your fortitude is going to need to be CTM strong because you're just preserving your capital, which in hindsight will have been brilliant. But going through it and doing it, that might be another thing. So there's nothing easy about any of it. The good thing about Bitcoin and crypto is that up or down, there where the opportunity to make money is there. And the same thing with Tesla and Nvidia. If they go into a bear market, we trade them on the downside. Yeah, I think all these things, whether or not you're talking about these other leverage ETFs or you're talking about other solutions, they require more of a 1.0 solution. I don't think this is where the opportunity is. And you could see since the bull market broke out in 2023, we would have just been wasting time and money and effort trying to be allocating here over Bitcoin and tech. So yeah, I think that we've done uh, uh, an amazing job at being able to concentrate where we are. And one thing about the markets is that the opportunity is endless. There's so many things that you could choose and do. Well, we're here to do is conquer the markets, and we're here to be able to put people into situations that they never actually imagined were possible. And it's going to be even, over the next 15, 20 years is going to be so much more important because mainly as people move towards a time and place of retirement, being able to so much more comfortable having CTM templates to help you preserve and grow that capital at a rate that's not possible elsewhere. Look, here we are. Everyone have a beautiful day. Again, I loved going over your thoughts and comments in the comments below. On the replay crew, anything want to talk about, anything tomorrow on Fun Friday, throw it in there. We'll bring it up. Until tomorrow, have a beautiful day, everyone. God bless you. I'll see you all back on the inside.